video, we're going to go over technical analysis basics. I'm going to teach you different time frames, different indicators, and how to spot support and resistances. So for that, let's head on over to my computer and let's get started. Guys, haven't already, hit that like button, share this video with somebody that you think would find it useful, and let's grow this community together, guys. We're right over 600 subscribers, and I've only been doing this for like 2.5 months. I'm extremely excited. I am extremely grateful. Thank you guys for everything. So this video is something that people from my private stock market membership group have been asking me to do for a bit. If you want to be a part of that group, the link will be down below. So one of the things that I think most people don't understand when it comes to technical analysis is the importance of different timing on a chart. The software we're using today is Thinkorswim. It is 100% free and I highly recommend it. Now, specifically with TOS, but also with most charting softwares, you are going to see up in this top right corner the different time frames in which you can view a chart. You know, traditionally there's the 1 minute, the 5 minute, the 15, the 30, the 1 hour, the 4 hour, and the weekly, and also the daily. That's why you won't see it here, because that's the one I'm currently using now. Each time frame is really going to be used depending on the type of trade that you want to take. For instance, if you want to day trade, you're probably going to use the 1 and the 5 minute charts. Personally, for day trading, I use the 5 because the one thing that you'll notice is that the longer out the time frame goes, the more weight it's going to hold. The 5 minute is going to hold more weight than the 1 minute. The 15 is going to hold more weight than the 5 minute, the 30 more than the 15, the 1 hour more than the 30, the 4 hour more than the 1 hour, and the daily more than the 4 hour. So the longer out you go, the more weight that it's going to hold when it comes to support and resistances or possible trends that you think you see. A general rule of thumb is that the 1 minute, the 5 minute, and even potentially the 15 minute will be used for day trades. As well, you could use the 30 and the 1 hour for swing trades, but I primarily, when I'm swing trading, look at the 4 hour and the 1 day chart. Now, these, like I said, will hold more weight than basically any other chart rather than the weekly or the yearly, but it's also in a smaller time span that you can take better advantage of movement in the market if you want to swing trade something for, say, a couple of days. When it comes to technical analysis, one of the most important things that you can do is learn how to find supports and resistances. A support is obviously an area or a trend in which a stock finds a support and holds that area. This is called a support. Now, this line right here, and what I'll usually do, especially when I was starting out, just to make it easier, is I will make this line green. So on Boeing here, we can see that the support is right around $320. Now, some people say that in order to make a trend line, you need to have 2 points of contact or 3 points of contact. A good rule of thumb is that the more that the stock hits that point of contact, in most cases, the stronger that support or resistance is. So in this case, we're looking at a daily chart, which is the past year. Each one of these candles you see is one trading day. So that we can see in the past year, Boeing hit the 320 area 1, 2, 3, 4, broke, but then came right back 5. So 5 times in a year, Boeing hit this 320 mark. That is a good resistance. So this is where my trend line will be. But if you look at the resistance, and to make it a little easier for you guys, I will make this red. And if you're looking how to draw a trend line, you simply go up to drawings, click that, go down to tools, and use trend line. So as you can see, this $378 mark was hit 1, 2, 3, 4. On the 4th, it broke a bit, but ended up coming back down, bounced 5, 6, 7. See here that obviously this is a trading zone for Boeing. Now, what you will notice is that sometimes if a stock bounces here, say it didn't bounce and it broke under, potentially this support could become a new resistance and the trading range could be under here. Or in this case, say this broke up above that 375, 380 area and it came down and bounced. Well, it could have moved up and this would have been the new trading area. So support and resistances are key for day traders and swing traders. And like I said, the further out, the more weight this holds. Let's say that we were going to day trade, right? And the thing is, with support and resistances, the more that you spend time on the charts, the easier it's going to be for you to spot a support and a resistance or a channel. So 5 minute, right? Let's say the very first thing we can see here is this trend, right? It's not perfect, but right off the bat, we can see, okay, this has been a resistance for Boeing. We can also see that if we attach these points of contact here, that this has been a bit of a support for Boeing. Now, I'll go into this later, but this would be a bit of a wedge. And a wedge is actually one of my favorite things to trade. I know win is specifically one. If we go out and say we wanted to swing trade this for a couple days or, maybe a couple weeks, we can see here, even moving all the way out to this daily chart, that here 2 times win has hit $150 area and has been rejected. And we can see that 1, 2, 3, 4 times win has hit this $102 price range. Now, imagine, right? And it's not going to always move perfectly. It's not that, it bounces and then hits it. As you can see, this kind of happens in waves. But if you were to right here have grabbed at $103 and rode it up over 50 days, you would have made 36%. If we could have grabbed it here, that's 46%. Now, like I said, just because there is a support doesn't mean it's always going to bounce. It could have broke. Just because there's a resistance doesn't mean it would have gotten rejected. This most recent rejection here was not necessarily technical. I mean, it lines up technically, but it was more so the Wuhan coronavirus that was really affecting win fundamentally. Technicals are something that's important if you're going to be an investor as well, but like I said, just because something has happened before doesn't mean that it's going to happen again. Let's look at something like AMD. As you can see here, we can see supports and resistances. Now, this is not like a perfect channel like we saw with Boeing, where it just trades horizontally and horizontally. This is like a wedge, like I did with the 1 hour on Boeing. We can see that if we draw the points of contact right here, 1, 2, 3 times, we're making this rising wedge. And if we do the supports here, 1, 2, we're making a rising wedge with AMD. This is something that I like to play. What happens most of the time with a rising wedge is that you'll see it bounce within these supports and resistances until we eventually get to this point where there's so much pressure that it's going to have to pop one way or the other. So normally what happens with a rising wedge is we get all this movement and then we get this big, kind of pressure built up here. And then normally we'll see a break and it'll sell off to the downside. Now, this could also be the same with something that, I think AMC, this would be a descending wedge where you can see that we're kind of doing the opposite. We have supports on the way down and we have resistances on the way down, but we're getting to this point where there's a ton of pressure and this thing is going to have to release itself. And so with a rising wedge, it normally releases itself to the downside. Now, with a descending wedge, it usually releases itself to the upside. This is just made for you to find support and resistances when you're day trading or swing trading. And the last one I'll show you is Microsoft. Now, Microsoft is a pretty easy one to find most recently. What you'll see here with Microsoft is an overall trend line, right? So there doesn't always have to be major support and resistances. There can just be a trend line. And we'll see that off of this trend, we had 1, 2, 3, 4, 5 bounces, which since this earnings, the stock has really taken off. But if we go into a shorter time frame on the 4 hour, we can see here that there's pretty much a perfect channel that is happening most recently. Now, this is something that you could technically swing trade because you see rising resistances and rising supports. So think about it. If it got resisted here 1, 2, 3 times, and it's been holding this support around this EMA line, Yes, it did break here today, so it could be breaking this pattern and it could fall down to this 50 SMA or the 100 SMA. But say where it opened this morning here, it would not be a bad idea to take a position and expect a short-term move back up to $192. Day trade, trend lines, and support and resistances are also important, but like I said before, it will not hold as much weight. So let's just take something like Tesla, right? You can obviously see that throughout the day, if we connect this support line to this support line to this support line to this support line to this support line, then we will see a trend, right? But we could just as well connect this resistance line to this one. It didn't quite touch it there, but it looks like we're getting back up and it got rejected here. So if we zoom out, we can see that in this situation, we're kind of making a wedge. And now normally when you see a wedge like this, you see multiple resistances all at the same area and you see higher lows. Now, kind of like the rising wedge that we saw before, there's probably going to be a bit of pressure and then eventually is going to get released. But when you see these rising lows, most of the time, but not all the time, the pressure builds up and then we get a release to the upside. So if you wanted to day trade this, which I personally probably wouldn't trade Tesla right now because it's just so volatile, you could buy right here at 779, wait for this to play out, and if it breaks up to the upside where it was earlier, that's a 1% move. Now, if you wanted to be safe, and I'll give an example, say you wanted to day trade Tesla today, you'd buy it here. What I would do is set a stop loss below the previous support bounce. So I would purchase right here at 779 and I would set a stop loss just in case, I usually set a little lower just in case, you get stopped out. That's the worst. And then it bounces. So I would buy here. I would set my stop loss here, and then I would probably start taking profits up around this 790 area. It's important to understand support and resistances, not because they're always right, but because if you understand support and resistances, you can make a disciplined and rationalized investment or trade. Last thing that I want to go over in this video are some key indicators that I use. And now I'm not going to do a full in-depth video right now on the different indicators and what they mean. Most of you probably already know that, and if you don't, I will be making a day trading and swing trading course in the future, doing a deep dive and making an entire section just on indicators, what they mean, and what you should use them for. But the main indicators that I use are the MACD, the RSI, the SMA. I use the 50, which is the red one, the 100, which is this green one, and the 200, which is the gold one, as well as an EMA or an estimated moving average. I will show you my studies right here. If you need to set up any of your indicators, go up to studies. These are the exact indicators that I use. Now, sometimes what I will do is if I'm day trading and this works better for the 1 minute and the 5 minute, I will come here and I will hit my load study. And this special one I have has a VWAP in it. Now, I only use a VWAP if I'm day trading, and it's really good for that because you will see here, if it's trading in this upper channel, it's usually bullish. And if it's trading in this lower channel, it's technically bearish. A lot of day traders will do is wait, see how it fell below this VWAP. They'll wait, and then once it breaks above the VWAP, comes back and holds support, this is usually a good entrance, and you can scalp it from VWAP to VWAP. In this, it's only 0.56%. I used to use a VWAP a lot when I was in and out of trades all day. Now that I take more of my time and I mostly swing trade, I don't really see any reason for a VWAP, but I figured that I would put it in here. Now, SMAs are a great way to find support and resistances if there's not really a trend. You can see for something like Microsoft, this thing has just been going up and up and up. And it's not as easy if you're a beginner to just see like this is support, this is resistance, because it's not moving sideways like Boeing and Winwar. But one thing that you'll notice is that SMAs usually tend to be a pretty predictable support and resistance for a stock. Same way that when you're looking at a chart in different time intervals, that the longer the time interval is, the stronger and more reliable the time frame or the pattern will be. So like I said, the daily chart holds more weight than the 1 minute chart. Well, it goes the same for SMAs. Obviously, the 200-day SMA is going to hold more than the 100, and the 100 is going to hold more than the 50. So if we just zoom out very quickly and we take a look, that at one point it pulled back and bounced off of this 200. It was moving across the EMA and the 50, but you can notice that it since then has not broken and held below this 100-day SMA. We can see that it bounced 1, 2, 3 times off of this SMA. So since we broke the EMA, which most recently has been bouncing off of it, we broke it, we can see that it pulled back to this 50-day SMA. Now, great. It could hold here. This could be support. It could move back up to all-time highs. But if it breaks this 50 and it falls down to this 100, there's a pretty good chance that it's going to bounce. Now, like I said, it doesn't always mean it's going to bounce, but there's a pretty good chance that it's going to hold and bounce on this 100 SMA. Now, if this 100 SMA is breached, you can bet that it will fall to this 200-day SMA. And if we zoom out, ever since it's pulled above this 200, we have not seen it fall below it. So if I were to take a trade on Microsoft, I see everybody, I'm not telling you what to do, but I see everybody on these stock forums recently like, oh, going to Microsoft, there's a pullback. To me, that's not a big enough pullback for me to go long on Microsoft. I would maybe take the trade here, but even at that, the risk versus reward is not really worth it. What I would do in this situation is be patient, wait for it to fall below this 50 since it's not as strong of a support, wait for the 100, and then your risk reward is worth it, because if it bounces up to all-time highs, that's 10%. And if it falls and somehow breaks this 200, well, then you set your stop loss and that's a 5% loss. So a 2-to-1 ratio is not too bad. Now, you can use SMAs when day trading. Let's take a look at Microsoft. We can see that once it broke below this 200 SMA on the 5-minute, it has not been able to get above it. We can see if you would have took a put position right here, nice move down. You could have waited for it to come back up. It got rejected again this morning on this 200 and it bounced back down. Now we're approaching this 200 again. I'm not telling you what to do, but if you wanted to day trade, you could wait till it hits this 200 and then you could take some Microsoft puts and see if it runs its way back down here. SMAs are an extremely powerful tool that I like to use. That is it for today, guys. I just wanted to loosely touch on some technical analysis basics. If you guys want to learn more of this, like I said before, I am making a technical analysis course that will go over all of this. It'll go over how to day trade, how to look at technicals for swing trade. I will go into every single indicator that I look at, and I will even trade live for you guys in that course so you get a better understanding of what I'm looking at when I'm taking a day and a swing trade. If you guys want to be part of the private stock market membership course, the link will be down below. You will be part of our private Discord server where I go over every single trade and investment that I am making. As well, if you're part of that, you get instant access to me 24/7. I can answer any of your questions and go over any possible trade or investment that you're looking to do. Thank you guys for watching. All of those links will be down below. And until next time, I'll see you.